Introducing a new era for discerning Australian investors. Brought to you by Ausbiz and backed by deep market insight, professional analysis and a proven track record. Our focus is simple: to connect you with exclusive and compelling investment opportunities. Discover what's next at ausbizcapital.com.au. This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Well, hello and welcome to The Global View. I'm Nadine Blaney. It's a pleasure to be here with you on Wednesday, the 18th of June. Well, investors are nervous as the U.S. military moves fighter jets to the Middle East. The S&P 500 lost 0.8%, the NASDAQ 0.9%, and the Dow 0.7%, with the SIBO VIX index, the volatility index, rising 13%. All S&P sectors were lower except for energy, as we saw those oil prices rise. Defense stocks also once again outperformed in the U.S., Lockheed Martin amongst those gainers. Solar stocks, though, fell after U.S. State Senate Republicans unveiled proposed changes to Trump's tax cut bill, including a phase-out of solar, wind, and energy tax credits by 2028. Eli Lilly shares eased after agreeing to buy Verve Therapeutics. Verve's shares soared. That deal is worth $1.3 billion. In tech, NVIDIA shares rose on a broker upgrade, while Apple shares fell. A U.S. court overturned a $300 million patent verdict against the company. NVIDIA actually settling about 0.4% lower. In economic news, U.S. retail sales fell 0.9% in May, the second drop in a row and the largest monthly drop since January. Motor vehicle sales were down as the rush to beat tariffs waned. Despite the drop, core retail sales increased 0.4%, showing a consumer still supported by solid wage growth for now. A Fed report on manufacturing showed a slight rise in output through April's numbers were revised down. I should say, though April's numbers were revised down. Industrial production overall contracted by 0.2%. Import prices are being driven down by dollar weakness, and confidence amongst home builders hit the lowest level since December of 2022. Now, the Fed Reserve will be considering the data at its two-day policy meeting, which got underway today. Traders are now pricing in one cut by October, but are expecting the Fed to hold rates in the 4.25 to 4.5% range. The U.S. 10-year yield fell from 4.43% to 4.39%. And the U.S. dollar index strengthened as soured risk sentiment dominated the soft data. Bitcoin took a hit. It is currently trading down by 2%, although there was a Senate bill passed in terms of crypto regulation that seems to have mitigated the losses. Crude oil futures bounced. Brent hit $76.50 per barrel. Major oil and gas flows, though, have not yet been hit by the Middle Eastern conflict. Gold edged higher, but gains were capped by the rising U.S. dollar. Copper and iron ore fell, iron ore down by 1.7%. So let's get across how investors should be considering geopolitics versus tariffs versus interest rates as well. I caught up with Elfreda Jonker from Alphinity Investment Management a little bit earlier on to see just where she sees markets are headed and to get some stocks that they're happy to buy, hold, and sell amidst the ongoing geopolitical tension.
I think as an investor, having a sort of overarching view of what's happening in global markets and the global economy, I would say all three of those are very important. I think at this point in time, you probably can't ignore any of them. As long-term investors, we try and not get too bogged down with short-term noise, because a lot of these events will potentially play out in the next week or two, and then the market will digest that and will continue to focus back on company fundamentals rather than what's happening from a top-down geopolitical or tariff point of view. I think the important thing to highlight, though, is that all of these are important for companies, particularly tariffs. I think we have probably forgotten, with all the geopolitical noise playing out, that we are very close to that 9th of July when the reciprocal tariffs will come into effect. And we haven't actually seen a huge amount of deals being made with many countries. With US and UK has done one, but we haven't really seen many others. So I think the implications of that, talking to companies and what we're seeing in the data, we haven't really seen a huge impact from tariffs flow through the numbers just yet. So that's still ahead. We need to be aware.
Yeah, and one thing that I think of when you've got, it feels as if global leaders stretched so thin between geopolitics, trying to do these trade deals. I mean, even if you take the US president, where is the focus from him and his administration? And there's so much work to be done when it comes to these trade negotiations.
Absolutely, and I think what he is, clearly he wants to be in every conversation across the globe and have his footprint everywhere. And as currently still the biggest economy in the world, you probably would expect them to be. But just from a geopolitical point of view, for example, him getting involved in Iran, Israel, that's just going to escalate uncertainty. And if you look at what's happening in markets, and we bring it back to what we look at, for example, the VIX index, which is really the fear index, that is sitting at around 20. So it's still, it has been ticking up, but it's not crisis levels. I think the markets are digesting this, and at the end of the day, I think we as fundamental investors just need to keep our eye on the ball. And at Alphinity, we specifically look at earnings and earnings revisions and where we can find companies that can surprise the market expectations. And I think that is where our focus continues to be. And that's why, from a global perspective, our global investment team travels a huge amount and recently been everywhere but the US, for example.
Okay, yeah, I was going to ask about that because I did know that the investment team had hit the road. So Europe, what was the sense of what you were getting from companies in Europe?
Definitely more positive than before. I think we need to understand that, yes, it's still an uncertain environment in the sense that from the tariff perspective, we still don't know what's really going to play out there in total. So there's a lot of things happening, and obviously, as we've discussed, geopolitics. But if you talk to the companies, there definitely is more of a quiet sense of optimism. I think they are quite cautious to really front run and try and be too positive around growth. But net, I think growth is starting to come back. Top-down macro, particularly for the banking sector, for example, it's very positive that they are now out of that sort of environment of zero rates, and we're starting to see the yield curve picking up, credit not doing too badly. So overarching, I feel like there's probably a bit more of a positive story coming through in Europe and what the consumers are thinking and doing relative to the US, where we saw overnight again that retail sales and industrial production have actually declined in the last month.
So I correct me if I'm wrong, I believe you have holdings in L'Oreal, for example, in Europe. So positive read-through for those companies in the portfolio?
Yeah, definitely. I think L'Oreal is one of those that it touches quite a few consumer sort of areas. So net, when we've met with L'Oreal, there definitely was a more positive outlook on what they're seeing on the ground. Clearly, some of the areas they're in, like beauty, for example, is still really strong. But if you look at what's happening with the underlying consumers that really buy their type of products, for example, the China consumer, there's been a lot of stress that, they're still very weak and, not going to be spending. What we are seeing, not just for L'Oreal, but also for some of the companies like LVMH or Richemont, we also own Richemont in the portfolio, for example, is those underlying consumers are not necessarily spending where they used to spend, but they're still spending. Okay. They're probably just a bit more choosy in where and how they spend. But net, our view is that a company like L'Oreal, super high quality, very diverse, it is a company that we're still very happy to hold, because eventually, if you look at where they sit within staples, it's still a relatively defensive space to be in this environment that's so volatile.
Yeah, well, I still buy my L'Oreal mascara. I swear by it. Okay, and when we go to China, I believe the investment team was in China as well. Where is the exposure in China? Because if you're getting the Chinese consumer through the likes of L'Oreal, are you playing the Chinese stock market or exposure any differently?
So we haven't had a huge amount of exposure to China, to the direct stocks in the Chinese stock exchange. I think our preference have always been to have companies with indirect exposure, like a Richemont and a L'Oreal, for example. But the recent trip that our investment team did was very much focused on AI and what China is doing in AI across sectors. And I would say the overarching feedback and what's been very interesting for me is just how far progressed they are. I think if you have to summarize it, is China actually has a really strong top-down plan from their government about how they are incorporating AI and also how they are educating in AI. So for example, I think if you compare the US versus China, US has been by far the leader in AI and what we're seeing as far as new capabilities are concerned. They want to be the best. Whereas if you look at China, for example, and you take a view on, the GPUs from an NVIDIA that they can no longer access, the highest quality ones, it's okay for them because what they're saying is it's good enough. So their focus is more on what is our long-term plan? How are we incorporating AI in every sector in the economy? How are we educating our kids in AI? For example, one of the things our analysts saw was an interactive whiteboard, where that's actually being rolled out in the schools already in China, and that's where you can draw a picture and then interact, make it 3D, add it on. So for me, what really struck me is just the government's got a plan, they know what they're doing on energy, they are spending huge amount in new economy efforts such as AI, and they want to compete. They want to be the world's biggest economy, and they want to be in the front. So even though we don't hear from so many companies there all the time, I think what's happened with DeepSeek is that we have to pay attention, and it's a lot cheaper. And a company we own, for example, is Tencent.
Right. Okay. Can you just quickly explain to me why you've sold Apple and Alphabet? I dare say it might dovetail with what we were just talking about.
Yeah, I think not necessarily to take away from Tencent, which is really a company, a very diversified, fantastic, high-quality company with many growth avenues. I think if you look at the Mag 7 and where we've come from, I think into sort of the end of 2024, we had a lot of exposure and they were the main drivers. But I think it's time that you start to diversify between them. And really the reason why, if you look at both Google or Alphabet as well as Apple, is on a relative basis, we don't feel like they are winning the AI game at this point in time. Definitely Microsoft, Meta, Amazon, they are definitely ahead from an AI perspective, and particularly Apple has been very disappointing in what they've been able to roll out now. If you just think about Siri and how many people actually use Siri, and whatever they've done with that has not actually been fantastic. I think they also have a lot of competition in some of the other areas that they're in, and of course the getting 25 billion from Google is not going to be really positive if they're actually not going to get that going forward, given the regulatory focus on that. And then on the other hand, Google being on the forefront of AI and really looking back over the last 10, 15 years, they've been on the forefront of what is new in the market and coming out with absolutely fantastic companies like Waymo and Google Cloud and Gemini now. So they are definitely in the game. For us, it feels like currently at the moment, with search still being 57% of their revenues and probably 80% of their earnings, that is a problem in the sense that a lot of the chatbots and LLMs are going to question that core part of their business. And even with Gemini and what they're rolling out in AI, they're actually disrupting themselves as well. So until we get to the point where all the new efforts are coming through in the bottom line and supporting what they're losing in search, we just think that some of the other players have more upside from here. So it's not never again, it's just not for the moment.
Got it. And I understand that you've opened a new U.S. position in Amphenol?
Amphenol, yeah.
I don't know this. What is it and why?
Yeah, so it's a very interesting business as well. Basically what they sell is connectors. So they are very geared to the whole electrification, innovation, AI trend happening globally. Because what they do is you find connectors in every single one of those various areas. So they are very exposed to data centers, AI, for example, but also aerospace and, all the focus being on the geopolitical area. They're also very much exposed to defense. So it's one of those companies that's not trading at a super, high valuation, but underlying they have really high return on invested capital, very high margins, and it's just a company that we think has got a lot of growth ahead of it and a nice diversifier in the IT space away from just the Max 7 and the benefits at the forefront. These are companies like we've owned in the past, SK Hynix, for example, that's part of that ecosystem of AI companies. So it's just a nice diversifier and a fantastic high quality business that we're super excited about.
All right, and just before we go, it's time to check in on where we're expecting the local market to open in just a few moments' time, down by 16 points or 0.2%. We'll be watching energy, we will be watching gold, and we'll be watching the financials as well. I had a chat with David Scott from StoneX a little earlier on. He's expecting, the valuations to start to hit home here at the local market. So we'll see what happens when it all plays out next.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.